Good day and welcome to a new edition of Insurance Europe Cover Notes. This is a web-based series that we organize with people who make the news also in insurance. And I'm very happy to welcome today Isabel Benjumea. I don't think you need really an introduction. You are a well-known member of the European Parliament, in the Econ Committee, very active. And as we are discussing today around the Capital Markets Union, what it means, how far we have come, what still needs to be done, I think you are the ideal person to talk to. Welcome, Isabel.
Well, thank you. Thank you very much. It's a real pleasure to be here today. And let me congratulate you on the work that you do for us. I always say this, in order to deliver the work that we've been doing in the Parliament this mandate, it's essential to have counterparts as your association. So thank you very much as well for your work.
Thank you. So, Capital Markets Union, this is a project that obviously wants to strengthen and really establish capital markets in Europe to the benefit also of the individuals, but obviously of the economy overall. As I said, it started in 2014. You did your own report in 2020. And we are a little bit at the crossroads because the whole project was meant to be finalized in 2019, but we are still talking about it. And therefore, I dive directly into the first question. From your perspective, what still needs to be done? Because we are seeing now a lot of buzz. Commissioner McGuinness, I think Eurogroup President Donoghue, we have the Econ Committee making also statements around a renewed energy that we need around the Capital Markets Union. We have the Draghi and Letta reports that are expected. So from your perspective, what needs to be done?
I've been saying this from the very first moment. What we really need is real political ambition to move forward in this project. You're referring how important CMU is. And I teach in university, and each time I have the opportunity to explain CMU, because sometimes you just listen, Capital Markets Union, what is really that? We are talking about helping the European economy to be stronger. That means helping savers have more options to decide what they want to do with their savings, helping the SMEs and the European companies to have larger options of investment and to find the money they need to build the project, to expand to wherever they need to do. And also, it's a very important project, very important to attract investment into the European Union. And in order to achieve that, we need the Council to be involved. And for me, you were asking, what is it that we really need? We need that political ambition. We've had, as you said, at the beginning of mandate, a very important statement from the Commission, and Commissioner McGuinness has pushed a lot forward because she really believes in CMU. But what I always say, when we saw the 14 steps that in the action plan that the Commission launched, there were not concrete deadlines and there were not concrete objectives, let's say it that way, for the Council to commit with. So we really need political ambition. And that means understanding that in order to build the CMU, member states need to get in the conversation on some issues that some of them don't want to step in, such as supervision, such as getting really a harmonized system regarding taxation. We really need to get a very clear mindset in the member states regarding that if you want to build the CMU, you really need to talk about banking union. So my biggest complaint is that we've talked a lot in the Parliament during this mandate. We've achieved quite a lot. MiFID is a very important achievement. And we've been able to maintain the debate alive. We've put a lot of pressure, or we've aligned forces with the Commission to put pressure on the member states, but we haven't been able really to make this a priority on the Council side. So we really need a political ambition in order to make it a reality. If not, we'll be discussing, that's what we've been doing this mandate, which is good, but it's not enough, about concrete actions, concrete measures. And we'll be discussing for endless trialogues in order to approve new regulation that, by the way, comes over the regulation that we already have in place. But we are not talking about the big discussion, whether or not we want, let's say it this way, perhaps it's easier for the people to understand, a single market for the capitals in the European Union.
Yeah, I think there are lots of things where we now can follow up. Let me maybe start with the investment angle. You mentioned it. This is the, attracting investment, also making sure we have long-term investment. When we look at it now from an insurance perspective, we had a couple of successes. So Solvency II was one. I know you were also very supportive when it came to the review. In your own report, you had requested at the time, to release capital within, obviously, a prudent context, but nevertheless, to make it available for more investment. We have also seen the European Green Bond that is now adopted, that was developed during this mandate. We are seeing an improvement in LTIF. We also get progress on with the ESAP that then I think will be implemented in 2027. So we have taken some steps. So some progress was made. The question I guess I would have right now is, how do we make sure, because there's always this risk of having a lot of additional regulation, that the things that were done now and which will enter into force as of now and in the next couple of 2-3 years, that this is not like forgotten, when it comes to a new mandate, because you will now also go into campaign mode, probably you are already, but the new mandate will also come with new ambition. How can we make sure that the things that have been achieved in the past mandate, that they are built on, and that, we don't get too much disruption by opening things that are already done?
You are tackling, for me, a crucial issue, which actually I think it's a weakness of how we are dealing with this, which is the constant review of regulation, and with such a short period of time. So we are not really letting the regulation that we are approving to really be implemented and see whether or not it's being useful, whether or not it has many areas that we might review. And you compare it to the US, the review time period is much larger. And I think we have a problem with that. We are constantly reviewing regulation without knowing whether or not they have been successful or not. And that means also an extra burden that affects our competitiveness. Because right now, our markets, while we are constantly creating new regulation on specific issues, but we are not yet building the framework that we need to build in order to really develop this very important project, which is the CMU. What we are constantly is reviewing what is already in place, making it sometimes more complex, but creating a constant overload of regulation. And that is affecting directly to the competitiveness of the financial sector in the European Union. There was this proposal by President Commissioner that one in, one out. Well, that needs to be a reality for the next mandate, and we really need to make it that happen. Then we need to reconsider the idea of reviewing the regulation every 5 years. I don't think it makes sense. It's making such a, for both sides. First of all, I mean, being the regulator, sometimes we find ourselves reviewing a piece of legislation without the inputs and the knowledge that we should have in order to review it, first of all, and then we are just creating a mess sometimes. So that would be one reflection that I think is important to bear in mind. And the other thing is that I believe that there's great achievements, and I agree with you with what you said, for instance, regarding Insolvency II. But at the end of the day, what I lack is a clear strategy and a clear ambition to make it a reality. If not, we'll have a new commission coming with, of course, renewed energy and their own political ambitions. But if we start discussing about concrete measures, like, for instance, let's say retail investment strategy, whether or not, how is it going to be finalized, the agreement, and how we're going to implement it, and we put all our energies on that, which, by the way, I will definitely get into that discussion, but we should, from the beginning, really have I think that there needs to be some kind of encounter between council, stakeholders, and commission, and we really need to be able to agree whether or not we really want to build that competitive Europe that attracts investment, a competitive Europe that allows as investors and companies to benefit from the CMU, a competitive Europe that helps to deliver a much more efficient pension scheme for the European citizens. That conversation needs to happen at the very beginning of the mandate, and I would definitely push for it because I think it's essential.
So overall, you're saying we need the vision first, and then we need to fill it with the details that still is missing.
Yeah, because the vision was already there at the beginning of this mandate. There was a clear vision. The problem is that in order to achieve that vision, the council should have been involved, and there should have been a political commitment to achieve it, and we lack that.
Okay, very clear words in a certain direction. Let's talk about the capital markets for the retail investors. You mentioned the retail investment strategy. Clearly, that is a huge project. It came towards the end of this mandate. There is now a vote in Parliament already on parts of it, but there are also parts that are missing, especially when it comes, how do we inform our citizens around investment opportunities? How can we give them comfort that when they invest their money, it's safe? Yeah. So there are lots of elements, and you mentioned, of course, the retail investment strategy in a way is also relevant when it comes to the whole debate around pension. We have a huge pension gap in Europe, one that is growing. We are doing studies within a service in Insurance Europe, and we know there are frightening data when you see that you have more than 30% of Europeans not saving. You also know that the gap is bigger for women. So what can we do effectively to address that? And is the risk proposal that we have currently on the table, is it helping us to address these challenges? What more needs to be done from your perspective?
Well, I said it publicly several times. I was very sorry that this such an important piece of legislation came at the end of the month. And I think it's a problem and it's a mistake. And I've said it out loud, and I believe it. I think that this should have come earlier. We needed more time within the Parliament to negotiate on the agreement, and we would have had time to have the trilogues and to be able to deliver a full final package. And I'm very sorry that didn't happen. Why it was the case, there are many opinions about it. I believe that there's been from the very beginning a problem trying to focus in the debate only on the costs. And that actually was reflected on the Commission's proposal. And what the agreement of the Parliament has achieved, I think that overall is a good agreement from what we received from the Commission. But I believe, and I have my concerns, that it's not enough. For me, if you really want to talk about CMU, you need to talk about the Europe of investors. And if you really want to have a Europe of investors, you really need to have you need to build a framework to make it safe. I cannot agree more on that. But you really need to treat the investors as if they were adults and allow them to interact in the markets as any other investor. And that's not what we are providing with this strategy. We are making progress. Yes, we're making progress in terms of, and I think that's been one of the biggest battles that EPP has fought regarding this risk strategy, which is we need quality advice versus cheap advice. And that has been, from the beginning, our biggest effort within the negotiation. Secondly, which is very important, and we've been also discussing it, which is the value for money. 30 were at the benchmarks. But the thing is that we finally fall into the Commission's proposal, and we were discussing the details of the Commission proposal from the beginning, and now we are starting a new mandate, and I will champion for that. Is that isn't a strategy to initiate investors, but it's not a strategy to really build the Europe of investors, and that's my biggest concern. We are still, a retail investor won't be able to invest in anything they want. They will have still to go through bureaucracy and an absurd amount of paperwork that we have to deal with. That will increase the cost for anyone who wishes to invest in Europe. Then we haven't, even though we fought very hard, but of course the other political groups weren't that much into it, we are not really getting rid of the obsession about the costs on the advice. And I'm very, I'm happy that we are moving forward, but I'm very unhappy that we are not really being ambitious with this proposal. And also regarding pensions, which is for me is a key element. And actually, we had this event in Strasbourg that you were so kind to attend. We have a Europe, as you were saying, right now that a population that is getting older. With right now, if you compare the savings among the different member states right now, they are reducing the savings, but they are also reducing their option, what they invest their savings in. And the profitability of those investments is lowering very much if you compare them to the US or you compare them to Asia. So first of all, we have a population that has trouble getting their savings, and they're not being able to make the rest of the savings and make them as profitable as they should, if they wish to do so, which is a very important issue to bear in mind. We have a public pension system in many of the member states. There is absolutely is bankrupt, and we need to use that word, is bankrupt, and we are not going to be able, my generation in Spain doubts that they will be able to receive a public pension when it comes. So that's a reality. And we are then creating the barriers for pension funds to access pension funds, and for pension funds to have a more freely capacity of investment of those deposits in order to offer better options for the elderly. I believe that should have been key in the risk strategy, and it's not. So for me, it's a debate that needs to be reopened, and hopefully it will be in the next Monday.
You mentioned, of course, this huge amount of information. I think we calculated we are at 300-something information points that the provider needs to share with a consumer at, first contact point of sale. And of course, there's a lot of hope that with digitizing the process, that could become better. But when you go there, you digitize. What we are worried about is, we are sometimes in Europe having the tendency of being overly perfect. We might get a great achievement on level 1, but then we enter level 2 and level 3, and it becomes more and more prescriptive. Yeah. And of course, here we are already in a situation where the level 1 is already very wide, because we are in a sales process where numerous texts apply at the same time. So everything comes together. And now, of course, the digital pathway would be one that could help us out. But do you see a chance that through digitizing the process, we could actually, address or ensure that in the future, a consumer can pick and choose exactly how much information they want, so that it should be made available, because it's always difficult to throw things out that are already established, but then at least to allow the consumer to pick the information that are relevant without going to the level of prescriptiveness in the digital, in a digital format, where everything needs to be again at the top layer. So for us, that would be one way of dealing with this overload issue, to at least say, let the consumer choose how deep he wants to dig.
I cannot agree more with you. I don't know if many of the staff, the Commission, have ever tried to deal with that